Yo, what is good? Let me get the link and then drop it real quick. And I gotta get some coffee in me. Slept in for an extra half an hour or something like that. Perfect. Boom. All right. So once we have some viewers, we'll once we have some viewers, and we'll close this one if I remember right, and we'll see what the viewership is like. Once we have some viewers, I didn't mean to close YouTube though. Once we have some viewers, we will get started. See, there's the coffee. I literally just made it, so I gotta drink this. All right, you can close this one though. I'm not trying to edit the video though. I know for a fact I can look at the chat. All right, this is what we're gonna do. Is it it's gotta be one of these tabs. Your channel, I think it is. No, it's your videos for sure. Content, I think it is. Live content. And then this is, oh, here it is, right here. Boom. Perfect. Okay. Took me a second to get to that, but we are here. Okay. So we'll be doing intraday trading today. It really hasn't been a super eventful week for swing trading. Sometimes that does happen. Sometimes you do set your limit orders and you have your analysis done and you get tapped out, which is perfectly fine. I'm not really worried about that. Gold's going to recover all those very small losses. I think that's like minus 1.80% overall for the month already. And gold would be, it's so far, like, I think that's like 2% in profit or something like that out of a possible 6 on first entry. And I do expect eventually a retracement to start on gold because there, you know the rules. You can't take out that nice of a high without coming back down at least one time. So since our dealer range is within our POI and there's an imbalance there on gold, she's definitely coming back down eventually. It might be way later on this week. It might be, it might be way later on this week. It might be early into next week, but that's not really what matters. What matters is like the long-term fundamentals. I'll keep that limit order on gold whether it triggers or not because I know eventually that unfilled imbalance, they're going to have to come back down and fill. So within the next few days, before they have that another continuation. So we'll keep an eye on gold for the week. For that second entry. Oh yeah, I forgot. I probably shouldn't be rubbing my bad eye. You ever try to get the crust out of your eye? I forgot you had a bad eye. Okay. CAD Swiss franc. We're gonna check on a few of the pairs that we had limit orders for. Your CAD is just now starting this kind of like nice retracement down. I'm gonna look at the data for that, but same thing. If it has not changed, then we'll keep the limit order where it said there was no predicted candles for your CAD, but this was like easily the most obvious entry in accordance to the strategy that I teach. So I'm trying to show you guys that I practice what I preach, and I actually print money every day, whether it be swing trading or intraday trading. Be right back. I'm gonna get some tissue. For some reason, I have no stuffiest nose on planet Earth. I think it's because my wife likes to have the room really cold. I'll be right back. 10 seconds. Perfect, we're back now. So close this. Perfect. Okay. It's like my favorite room to do analysis in because it's like closed off and yeah, I got an actual door and it's a good time. It's like meant to be quiet proof or soundproof. It's not quiet proof. There it is. That's how you know I just woke up. So let's go look at your CAD. The first thing I usually do if I have like orders kind of resting and getting ready to go in, potentially, I like to see if the data is still the same because there are reports that come out that might be change the data. I can just search it real quick. That might change the data and things like that. On the swings, since swings were not so eventful this week, like they normally are, I usually get into at least 2 or 3 by like Monday or Tuesday. But they just haven't been heavy retracements this week. We'll be focusing the rest of the week on intraday, and if there's a nice swing opportunities that end up coming up, that are just kind of like right there, we can market execution. We'll focus on that. So yeah, we have a rejection of what's today? This is 4-5. So today we have a rejection of 147.325 or 1.47325. Yeah. So we're gonna see if that still lines up with our bias. See, that is around 325, pretty much around where my crosshairs are at right now. This is 147.330, so I might be a few ticks off, but right here is where they expect. What's below that? I personally see some sell side right here and some sell side right here, and there's an order block right here that already respected this order block right here, and then this was the order block that one respected. So there's like a chain of valid order blocks right here that I drew in. It's still the same thing. I still expect price to come down like it's doing. Take out that low right there, and that low is more defined on the 1H. Take out that short-term low right there, right into this order block right here. This is that 4H order block, and then we'll have a continuation from there, considering how well the euro is doing compared to most everybody else. So it's still valid. Normally, when prime market terminal has a predicted level, price will just that'll end up being liquidity, and then we'll have continuation from there, from the actual predicted level. So I've noticed that a pattern of that. Because back in the day, not to say that they've gotten any worse, they've gotten great, only better since I've gotten them back in 2020. But unless you're entering on the 4H, usually the levels, like on the 15-minute, if like the 147, wherever it was, that'll end up being like more broken down candles and more bearish price action into your POI. And you have to filter out a little bit more where you're on like the 15-minute versus the hourly and the 4-hour. So, that's still valid. CAD Swiss franc does not look like it's going to come back up. I was looking down on my phone before I came down here. It just might, but from the looks of it, CAD Swiss franc is gone. It's one of my favorite one of my favorite pairs to kind of catch an easy move on. We are starting a retracement, however, so that they will be chasing these highs, and there's more context to them coming up here. So they took out these highs right here on your left. Wait a minute. Wait a fucking minute. That's funny. Coffee. I need more coffee. I'm gonna drink more coffee. So CAD Swiss franc took out the highs on your left up here earlier, and I actually expected them to basically create another high, which it did, and then come up again one more time to take that high out before the week is over, and that's where the order trigger is going to happen, basically at this 4H fair value gap right here. And that's relative to these daily sell stops that we're taking right here as well. So obviously price was coming back up to a premium, and this is the premium. This is really this little series of candles right here on your left, right here, that kind of like Judah swings from here to here, is the last real manipulation move before the actual drop that took that liquidity right there. So what I was thinking was, since this was the push, this imbalance very likely was going to come up to be filled at least to the 50%. But there was a possibility that it was going to tap on these last bullish candles before the drop, treating it as an order block. It's essentially the imbalance being filled pretty much all the way to its max point. And then there's going to be a continuation from there. At the time, I did have a predicted level of 0.64,810, and that lined up pretty much perfectly with the imbalance. So I'm going to check on CAD Swiss franc, and then we'll get to the actual intraday pairs. I'm going to trade New York Kill Zone today on a 15-minute time frame for like a 1 to 7, so we can just lock in some profit for the week. So we have 7th and the 10th. There's two predicted candles, and they're both rejections. We have a high of 068, 351 that says. So 351. You just change this. It's not a very big difference. 351 to what's current. So sometimes that does happen. You'll still have the predicted candles in your favor. So yeah, it's essentially the same limit order as I had before. So if they're saying that's going to happen on Tuesday, I believe it was. Let me go look. If those weekly price action is on the 7th, right? Then in that case, right here, that means this is all these highs right here, the ones that are left, the ones that were created, because like that's significant. But you also have to consider this buy side liquidity up top, because since they're coming up to that predicted level, then we know, like I thought, that this was going to come up and take out the high. It just is not going to happen in a timely manner. So today will be intraday day, and we'll try to catch just 2 trades for 1 to 5, 1 to 7. Sometimes you can't get that out of there, and sometimes it's like a 1 to 4 and a 1 to 5. Anyway it goes, it's like 9% in one day, and it's a good catch. So I'm gonna try to talk you guys through the trades that I'm looking at. This is all from scratch. I didn't do any pre-intraday analysis. I'm gonna look at NASDAQ because NASDAQ should be ready for a nice setup now as well, and we are going to do a lot of market execution today. So there's going to be a very eventful day, so long as the charts are actually, here it is, are actually moving nicely today. Let's go to the 5-minute. We'll be using DRIDR all day today to catch setups, and you'll be able to see how that's used as well. So this would be a bearish example right here. For example, for NASDAQ, the candle closes below the DRIDR right here. This would establish this with an 88% probability, this order block right here, as the high of the day for NASDAQ during this session. And same thing here. And this works very well with the concepts that I teach you. If you pair this, and you don't need any like higher time frame bias or anything like that with a DRIDR, it works so well that if you just use maybe like 1H context at best to enter on a 5 or 15 minute, this works super well. The 88% probability with just this alone, like I said, and then with all the context you have for your trade from your own confirmations, is insane. And like I said, I don't ever have this on. I just, I'll have it on to see the confirmation, and then I'll do the analysis to make the 88% probability of that high of the day, for example, make sense. And put some context behind that. Like if I'm coming from a daily imbalance and they're saying this is the high for the day, I'm going to believe them if it's a bearish imbalance. Like I said, I back tested this, every setup that happened on the DRIDR that actually followed through with itself, and it was about 85 to 88% accurate in terms of the trades that I would actually hit profit, that I would actually, would have actually taken. So pretty insane. When he said it was 88% accurate, I was like, come on, get out of here, bro. There's nothing that's just like right there in your face, 88% accurate, and I was mistaken. So GN, we got some bullish predicted candles. We will find out why. Since 10, they've been increasing bearish lots and decreasing bullish lots, and then we have actual predicted candles here today. Because prior to yesterday, there was no predicted candles, and retailers were not showing. I mean, they were. How much damn Band-Aid? I'm just gonna take it off. Whatever. They weren't showing too much, the retailers. I like to do the opposite of what retailers do, because just like technically on the charts, I show people how to filter liquidity and filter the manipulation that happens in the market, and I teach people about the algorithm that's in place, you know what I mean, and how that thing moves, so that you can make very predictable, repeatable moves and take those moves, right? Specific signatures and price actions that show the algorithm actually showing itself, right? And then you wait for the algorithm to tip its hand to you, and then once the setup is obvious, you take it. I'm going to pull up my trading plan too, because whenever I'm intraday trading, I sometimes get a little caught up. Where is the trading folder? Here it is. I get a little caught up sometimes on intraday stuff. I would say I'm good at intraday, but I'm not super great at intraday, right? Being good at something enough to be profitable and take good trades is not necessarily mean you're great at it. I am mainly a swing trader, But intraday is very fun to play with, and I'll keep sharpening the blade on intraday so I could be a versatile trader. You know what I mean? In between swing trading, when swing trading is kind of slow, which it is every once in a while, then you have to be able to intraday trade. So we'll look at GN for a long setup real quick. Intraday wise, I'll probably enter on a 15 minute. And if I see like NH4 time frame availability, then we'll do that. Or H1 again for an intraday, we can easily get 7% out of the H1 time frame. I'm just gonna clear off the entire chart. I personally, when I'm intraday trading, like to start from scratch. So let's start on the daily, and I like to have my 15-minute entries be off of the premise of the daily. Okay, and we'll be using breaker blocks and things like that as well. GN daily, we're gonna delete some of these markups here. Just some of them, not all of them. Some of them are not relevant. I'll keep the daily stuff, but everything else I'd like to redraw because price action has moved since then. Just delete the displacement because I'll probably be going to the 1H for an entry or the 15-minute for an entry. I really don't mind whichever one. 5-minute kind of gets on my nerves sometimes. GN, we had a rejection of, and you don't need prime microterminal to be able to see this. This is just like an assist, kind of like the DRIDR. It's just an assist for me to be able to see information that I wouldn't be able to normally see, and I can get information-based trading decisions, which are actually factual. Like this AI here is smarter than literally all of us. These predicted levels, since 2020, have been about almost 90% accurate. These levels, since I first got prime microterminal. So I'm gonna make it simple today, and we're gonna use these levels. My very first trading plan, actually, my first trading strategy involved coming here with this template and using these supply and demand levels that prime microterminal supplies. So, at the time I was being profitable, but this strategy right here using these levels was 80% accurate, actually. I passed a 100K challenge with these levels. So, we got a rejection of, where's the low of that? 198.416. So, let's delete literally everything. I decided I'm just going to delete everything. 188.046, I think that was. 198.416, my bad. 198.416. So that's usually the first thing I'll do. 198.416. 416. And then that's not until up there. So currently we took out a short term on the daily, and as you can see right here on the daily, it operates the same. You have some. It's not always the case, but this is just beautiful price action right here. Honestly, zooming in, where the daily trades nicely below a low like that into some type of imbalance or fair value or something like that in order to post a continuation. So right now I'm gonna just draw on a few things. I do want to be very minimal. You'll see me be extremely minimal on this chart. That's how I prefer it. I like to be able to see the candles and what they're doing and the liquidity real nicely. If I can't see that, then I get really caught up, I've noticed, on intraday trades. If it's too much on my chart and I can't see the candles, my brain just does this thing where it just self-implodes. I swear. So relative to the last buy side liquidity take, which would be right here technically speaking, and we could draw that in real quick. It'll always be your dealing range. Your new dealing range on the daily will always be relative to the last structure break if you're looking for a long, at least for the latest swing high. So it'd be like here and then technically here, but this one was more significant. You can see the price action, the retracement was more significant, and that's why I wouldn't count this one. There's literally only 2 bearish candles in this one. This is not a nice retracement. This is a nice retracement. This is a nice retracement, and it created a nice swing high. So you have to consider that whenever you see that heavy daily price action, 2, 3, 4 candles and 1 retracement, where it's actually pretty obvious, and that retracement takes out a low, like this one did, and like this one recently did, then that's a really significant one. So, the other ones are just BS. The other order blocks and all of that, even though your lower time frame, are just going to be liquidity. So you have to make sure that you're picking valid POIs based on the parameters that I put out for you, because the parameters that I put out is just data from me failing over the years, to be honest. data from me failing over the years, and then I'm documenting. I'm like, okay, well, I noticed that this happens every time this happens. I had a problem for almost 8 months straight where I would pick a wrong POI by like one level of liquidity, so it would tap me out and then go straight into profit, and that would happen with like 90% of my trades. So I'm like, I know what I'm talking about, but it keeps doing this. So trying to be a trade doctor to my own self, because I do this for people as well. I had a losing streak where I think I lost like 10 or 12 in a row, but that was due to my previous brain condition. I was having a lot of brain fog some months ago now, and I had to get that procedure done in order to get the fluid off my brain. So that was a very scary, very crazy thing for me. I'm a pretty healthy person. I rarely go to the hospital. Insurance people love me. I cost them no money because I rarely go to the hospital unless it's like a regular checkup. So like things like my eye and things like that, and just having fluid on my brain, very not normal. There's no things that run in my family, so that aren't diet related, and I have a pretty nice diet. So I like eat all organic food, and it's just crazy. So don't know why my body's trying to wreck me, but it needs to stop. So daily sell stops, those lows were taken out right there into this imbalance right here specifically. It did not come down to the order block actually, like it did right here on this wick. It came down to just the imbalance this time. So this is actually a pretty crazy obvious trade. Right here, you could have gotten an entry via the 4H time frame right here, but unfortunately we did miss that. I do like to have bearish liquidity shifts, and they took out the high right here as well, and then took out the low right here as well into the daily imbalance. I do like to have what is it called? Liquidity shifts from my POIs after liquidity is taken on both sides of the market when I'm trading. And that's the same thing on the 15-minute too. It's essentially looking for that same 15-minute time frame, kind of like confirmations that I look for. Did I ever open this? Yeah, I sure did. I'll just do this. So I like to have this up. This needs to be edited some more a little bit, but not very by much. The actual technical aspect of it, minus the Asian range. I just decided to take that out because I've grown past the Asian range. Not that it's a bad thing. It's a great thing. Asian range is good for if you're first starting these concepts in order to filter liquidity so you don't get stopped out. But after your eye gets way sharper, you don't really need Asian range, and it becomes more of a distraction than anything. So we have that going on right here on the daily. I normally drop straight down to the 1H after that, and I look for the 1H to trade above a short-term high, which this was a retracement. This was that same mitigation. Let me pull this down a little bit. This was that same mitigation right here. Price came down and mitigated this, and then we had a poke up. Technically speaking, a poke up above the high right there. It just became relatively equal. So the 1H, or my bad, short-term low. My bad, not short-term high. I'm thinking of short. So short-term low was traded below, which was right here. It took out a short-term low, and that's where the daily sell stops happen. So we have that checked off on my trading plan. Actually, where is it? For buys, has the 1H traded below old lows into discount territory or in order block with provided gap? If yes, it's a strong trade, and if not, wait for these events to occur as a genuine reaction to the order block or provided gap before you drop down to your entry time frame. So since we have that, and I got pretty specific with my trading plan, it's like a if this then that situation, and if you don't have that, you must just simply wait, right? So it's pretty hard when you're following mechanical trading rules, right, like this, to fail, because this trading plan is based off of everything that I've taught in education. I use the same one. So I dropped down to my 15-minute time frame, and now it's time to start looking, since we already had our 1H time frame confirmation. I like that. Let's start looking. So let's first of all make sure we don't have any news events coming out and things like that would stop us out of this trade. Let me see. And then we have to read just a little bit on it. So we had a positive report come out. Today is Wednesday, I believe. Yep. We had a positive Great British Pound reports, because Great British Pound is doing well compared to its peers, right? So we had PMI pretty much stay the same for For the this month, they had a 53.1. 52.1 was expected. 52.1 was put out as for the report. So that's a neutral. That's neutral news right there. Not necessarily negative or positive. And then we have services PMI. In March, go from 53.5 to 52.8 to 52.9, and it's gone up. So this was previously a negative one when it went from 53.5. But now they expected it to come out as 52.8, but it came out better than expected at 52.9. So the Great British Pound today had overall positive high impact news. So there's nothing really else today that I can see that would be crazy that would stop us out of this trade via news. And then the second thing I would do is I'll go look and see any articles, usually the first one, that's very relevant to the pair. So British pound and New Zealand dollar week ahead. They hit 21-week high. So 21-week high was hit on Great British pound versus the New Zealand dollar. So that's bullish context. Let me see here. The pound struggled to consolidate. Gains last week as comments of the Bank of England. As you can see, it says as comments from the Bank of England. Comments, words from important people who affect the currency pair and control inflation in their country and things like that are powerful. They can move the pair, right? If like Chairman Powell, for example, our fellow chairman at his last meeting said, which was like a few weeks back, said that he had to address Congress about inflation, and he was saying that he had a different projection now that he's seen where inflation was. You know, all the rate hikes have to catch up to the economy and reflect, so that he can see and make adjustments, right? And sometimes it takes a few weeks, or it takes 30 days until the next report comes out for inflation and things like that. So he might say, oh, we think that we're still going to have to do rate hikes and higher rate hikes than predicted, et cetera, et cetera. If you hear that man say that, the USD is going to fall right there with just his words on TV. Not even lying to you. That's how trading works. If President Biden announces that we are going to war with China, right, and he does a presidential address, which personally, I think that's going to be a thing, given how just fired up China is. And this is important to talk about trading wise, because every massive world event that happens affects countries, affects multiple currency pairs. Look at Europe in the year of the Ukraine war. They weren't even involved in the war at all, but Russia was being petty, and what they did was they cut off their gas line supply, because Russia is one of the biggest producers of oil, and Europe relied on them heavily for their energy stuff. So everyone's energy bill went up to like £1,500 or euros a month, and inflation was insane on energy bills and things like that. And there was no gas, and you know what I mean. They're facing a really big energy prices after Russia cut off that gas supply. And the reason why they did that is because Europe was being loyal to the United States, right? As they have been for decades. And that affected the pair. They went through an energy crisis, and the euro fell for almost a year and a half, actually. They're just not recovering in September. They fell for a full calendar year, plus inflation and things like that, too. So, like, you have to pay attention. Whenever these guys speak, just the important ones, I will go watch that for the time that it's on, because it's very important. If I hear more bearish talk from the central bank, then I will take that into effect and go look at the pair as they're talking to see how it affects it. You'll see volatile spikes as that person is speaking. It's pretty crazy. They're saying that the Bank of England president had mixed feelings about where they were going. Bullish market sentiment at the start of the week lent a Great British pound boost. In addition, the UK's distributors trades index, which printed above expectations as positive. The Confederation of British Industry, CBI, reported that sales are set to increase at a moderate pace in April. So they're already pre-setting the notion that they're going to continue to do good. On Tuesday, however, high grocery inflation capped gains for the pound and fell to a 4-day low. So they have grocery inflation, which is a factor in the country. If all the other inflations are taken care of, but grocery inflation is still extremely high, then consumers, everyday citizens are seeing grocery prices go insane, like they are now in the U.S., for example. For perspective, our grocery inflation is nothing compared to the Great British Pound, but I feel like our grocery inflation is insane because it costs like, well, I guess I have a really big family, but it costs like $2,500 a month to feed my family. It's insane, and it's gonna cost more now, pretty soon here. So high grocery inflation, it was weighing on it, but um, overall there's a grocery inflation that hit a record high of 17.5% in March. That's insane. I couldn't imagine. Midweek fears of a deeper UK recession dampened support for the Great Rich Pound. Pound New Zealand dollar exchange rate fell to an almost 5 month low. So overall, and they tell you about New Zealand too. New Zealand's having, I already know about New Zealand. They're having terrible economy. Overall, the Great British Pound is doing way better than New Zealand. Long story short, via economic fundamentals, and even though they're dealing with grocery inflation, they have too many just consistent positive reports that came out that's showing that their economy is doing better than it was last year. So that's as of late. It was a positive report that came out for the Great Rich Pound. Just a few factors that are making this bullish. So we're currently, and I'm gonna turn this purple because I can't do the red for my daily imbalance. Purple has just gotta be my color every time for that one. But this is the 15 minute inside of that daily imbalance. These are those same daily sell stops and transposed, and we already took out the short term low. So really, the only thing left to do is hop down to the 5, 4, 3, 2, 1 a minute and see if there is a and we have DR confirmations as well right here, right? So this is bullish, and this is an example of DR doing its magic, right? We got a candle close above the DR confirming that this is likely the low for the day, as well on the 5 minute time frame. So let's turn that off for now, and we can go look at some price action in more detail. So we'll likely target these relatively equal highs if they don't take them before the move down, but pretty textbook stuff, man. Technically a poked above it just a hair, but I would consider these relative equal highs. Usually you want liquidity takes to be pretty aggressive, as you've seen that they can be. Now, I'm not saying I don't count this, because, it's like pretty much perfectly equal. The algorithm has a habit and tendency of making these relatively equal pretty much perfectly, where it is buy side liquidity. Pretty much perfectly. So that's buy side liquidity right there. You have 3 highs that are relatively equal that I know the price will come for. The algorithm engineered that to be perfectly set at 198.206. All 3 of those wicks are pretty much perfectly set at 198.246. That's not a coincidence. So let's go down to the 5 minute real quick to see if I can find an imbalance, because we're already starting that retracement. This is why I like New York session, because trades are ready already. And I already have like hella confirmations. Let's see. The real question is, will they come take out this low? I do not think so. We can just use the DR, but I think that they will come and fill this imbalance actually, because this is a retracement, and then this is where the trade idea formed. The first time they trade above a major low high. So turn this off for now. So if that's the case, then we have a trade idea here, as I taught you in the education. That's where our trade idea is. Turn out something that's more noticeable, like orange. If we have black charts or something like that, yellow is a really good color for the light bulb idea. So that's where my trade idea formed, and that's where buy side liquidity was also taken. The first level of buy side liquidity was taken after the short term low, showing that that liquidity shift, buy side liquidity. So that was taken. You could put it as high as this, but that's where the trade idea is from, so that's what I'll focus on. So now we know, what do we know now? This is our new dealing range right here on the daily time frame. Oh, my bad, on the 5 minute time frame. Our new dealing range is going to be anywhere, and I can mark up a few of these. I like to mark up these because when I'm intraday trading, just to have myself to be a reminder, sell side liquidity, and because it took out liquidity on both sides of the market, this is going to be a strong low. Not very likely to be violated to the downside. And then this also took out a short-term low right here, technically speaking, and then came up and took a high, which gives that trade idea. Liquidity is taken on both sides of the market. I'm going to want to classify that as a strong low. The reason why is because it did not violate the previous strong low. So the previous strong low let you know, hey, I'm truly a strong low. And you can see where the imbalance happened, where the chain reactions happened. You had an imbalance here, actually, yeah, the order block imbalance here. So you can draw the imbalance or the order block, or I just like to do one or the other. Honestly, it really doesn't matter. If it came all the way down to the order block, I'd highly recommend. But like if you did the order block at the 50% again, like right here, or your order, then you can feel pretty confident knowing that if it might come down here at best, and you can have rejection. So we're gonna go 5-minute order block. Where's the 5 minutes? So that's one perfect rejections off there. Took out a short-term low right here. Price came up, gave us our trade idea, and respected that. And now we have an imbalance order block right here. I do believe since the imbalance is so pronounced that they will come up and take that. Let's pull this down. They'll come take that, take out some type of short-term low, which you can see the lows are right here, into an imbalance. Though I can do, if I wanted to, was take that same 5-minute imbalance and hop it on the 15-minute and use that 5-minute imbalance as like a, I thought I saved this as to the right. Use that 5-minute imbalance as like a lower time frame footprint. Let's see. So you got that 5-minute imbalance that we did find in discount territory. Price is going to end up coming for. Our target's going to be this buy side liquidity right here. We do have DRI, DR confirmations as well. So this is 88% probability that this is going to be a low of the day. And just like that same move I showed you yesterday, where we were waiting on that manipulation, it came down, and then you had an opportunity earlier in the day. We're going to pretty much try to repeat that same move right here. So DRI, DR is nice. We currently have price coming back down, but the RR would look like this. I'll do the 50% of that. I can move these, and you can move this over in time a little bit, and your stop loss could be just below the first strong low. That's reasonable. Like barely below it, tight, but right there, 24 pips. That's a reasonable stop loss for especially for the 15-minute. You have it. The strong lows are so close together, and they didn't violate each other. Or this one wasn't violated, and so far this one was not violated either. We have to wait for price to come back down, but you know the rules. Not very probable. Price is going to come back down, and price is going to mitigate this. You can even have a tighter stop loss, so you can put it behind this strong low, or you can have it behind this strong low at first, and then when you get your entry, you can reduce your stop loss, reducing your risk and keeping your reward the same essentially. So if you have 1% risk at 24 pips, you might be able to say, oh, I'm going to pull this down to like 0.8% risk for like a 5% gain. So that's how you hack the system a little bit. Let's pull this over. You can reduce your stop loss by like 50%, you know what I mean? And risk at 0.5% to still have the same gain. So we're going to put this right here. We found the imbalance that is likely going to be the case. It's always the imbalance that is within that impulse move up that gives you the trade idea. And then you can target these highs. Positive 1 to 6. I take that because this is not going to stop. Then this tracks right here. It's got to wick up a little bit. So 152 pip risk for a 24 pip risk for a 152 pip gain. So it's just a trade idea. We're going to have to look at some price action once price gets down here. Actually, shouldn't take long since we're in prime New York session, and the algo does run during New York session as well. We'll see. We'll see what transpires. So that's one trade idea right there. Likely like entry on the 15-minute based off 5-minute price action. So obviously, if they're truly bullish, then once we get down to the 5-minute fair value gap, we're gonna have rejections and things like that. On the 5-minute is going to be a very big struggle down here. Essentially, you expect it to consolidate in your POI, just to expand again. So once I see some choppy price action consolidation, I'll wait for just a little bit of price action and then hop in. So once that reaches our POI at any time here, we will check that out. That's one. You really don't need a lot. I only plan on getting into 2 intraday trades today at all. 15 or 5-minute entry, or if the 1H suits me, then I can just do a 1H entry as well. So pretty nice. That same liquidity shift transfers to looking like this on the 15-minute. So we'll wait on that and go from there. Let's close this one. Perfect. So that's one. We'll keep GN up just to keep it up. We can go to overview. Actually, no, we can go custom. And then another thing that I do like to do, forgot about this, was the charting, is I personally like to, like this is the daily, this is the 4 hour time frame, this is the 1 hour. I like to have my charts like this sometimes too. I'll do my daily markups, and then I'll do my 15-minute, my 1 hour markups if there are any, and then I'll do my 15-minute markups, and I'll have all three charts up at the same time. And then I'll be literally watching the daily react to my POI, or the daily pushing up, for example, from the imbalance. Let's just say, for example, while the 15 minutes give me continued bullish confirmation. So it's a really good way to kind of get your game up, you know what I mean? Because if you're watching a higher time frame do the thing while you're, you know what I mean, you can get perfect entries on your assets and pairs. So one thing that I would recommend is that I would usually only have 3 charts up, actually, and not 4. I would take one of these out for sure. But you'd have the daily being your biggest, and then your 1 hour and your 15-minute pretty much right here on the left. So you have your daily taking up this whole screen. Or you can have your 15-minute taking up the whole screen and have the 1 hour on the small one. That way you can focus on your entry time frame, and you can still be looking at your other time frame as well. So it's an option. On MetaTrader, you can actually have 3 of the same in trading view as well, but you have to pay like the $30 a month for the multi-chart. Is worth it, but it's a good way to trade. So if I was focusing on just like one pair at a time, this is just an example. We'll get to the other pair in just a moment. I'd have my imbalance right here from the daily, and then maybe the buy side, and then here I'd have a different time frame. First of all, we got the, let's just say, 1 hour, and then we got candles. So you can see that you can draw liquidity. 1 hour took out the short-term low. This is going to be your POI, and just copy your markups over. And then you can hop down to here and then be like, I bet this is the 15-minute time frame, and then do your same markups here that you have on the 15-minute or the 5-minute or whatever you want to call it. And then you can see price action moving from a higher time frame to the 1 hour to everything else. So obviously, if you were going to be wrong on the trade, you'd see the 1 hour just continue down and see no resistance, and that would reflect on the 15-minute as well. So it's a good way to have technical way to have what's it called, good charting. That's how you say that. So good charting, good entries and things like that. I do like to do that quite a lot, but unfortunately right now I don't have the time to sit here and put together a template, because the session's like right in this prime. So you're odd. It got a little retracement starting, but that's still bullish. GM we're looking at now. GU is going to be also an asset. We have a bullish predicted candle as well. So bullish predicted candle, retailers are majority selling. British pound's doing way better than USD right now. So GU, we can look for intraday as well. We have a low of 123,766. I think it's one in there. Let's clear off the entire chart. Go to the daily time frame. Minimize this. And zoom into current price action. So we have 123,766. So I mark that up real quick. $766. Move that over in time a little bit, and we can see why 123,766 was even a thing. Oh, another thing I'm going to do on those other pairs is I'm going to drop those levels as well, and use them as breaker blocks and things like that, because they usually end up equating to breaker blocks and valid order blocks. So if I have breaker block context as well, then it becomes even better. I could put the daily breaker block right here. This one was very obvious. But that would be just too wide by the time I got down to the 15-minute. It'd be like just taking up the entire screen. So that's why I like to have my daily markups very minimal. So I do like to draw my daily liquidity though. So we had Major buy side right here. All that was taken up to even here. Inch that up a little bit. That was taken. Daily buy stops. And now they're saying 123.766 is going to be the daily level that we're going to be bullish from. What's at 123.766? It seems to be an order block right here, right at 123.766. So relative to that, I will just draw that in right on the body, since that's just above 123.766. If they are truly going to come back down even a little bit to a 123.766, as they state, then we should see a daily order block rejection right there. And just keep it real minimal and have all my bigger markups for my lower time frame and maybe even the 1H. So move that over a little bit. What a gloomy day. So that's pretty much all I need here. Maybe even a target, but I can just target the previous day's high. So yeah, the previous day's high, previous day's low right here. I also like to use that intraday wise. So I'll mark that up as well. Keep it pretty minimal because it could be a target. Previous high of the day right there. Fix it a little bit. I get very anal when it comes to these things. And then we got previous low of the day right here. Very important because your valid POI on your entry time frame will always be previous high of the day, previous low of the day. It's very good to mark up. This how I've already shown you this, but it's how they take the liquidity and things like that as well. So far, the 1H has not traded below any type of short-term low just yet. Relative, or it did right here. This is a very defined short-term low right here. So I'll draw that liquidity in real quick on the 1H. The smaller time frame liquidity than the daily. So you just traded below that short-term low into this bullish imbalance right here on the left. So sell side liquidity right here. Let's focus in on this area. And we can see relative to this structure break, this was a pretty nice multi-hour retracement. This was an even bigger one. So given the prime market terminal predicted level, which is right here, let's move this over in time a little bit. I like to have this kind of like right in my face so that I don't forget about the level. Not so much that it's inside of the price action, but just enough so that it is there. So this is those same daily sell stops just transposed down to the hourly. Sometimes I like to move this over in time a little bit, but relative to these structure breaks right here, and a lot of people would once again be wondering, why are you drawing in liquidity twice? It's because my daily time frame liquidity is going to not cover, once you drop your lower time frames, all of the actual swing highs. As you drop to your lower time frames, you'll have more swing highs and things like that to account for, because price action will break down. So you have to make sure you're going through and marking all your liquidity and things like that on all your time frames that is taken and that's to be taken. The ones that you expect to be taken are the most important. So let me see here. Price did trade below here. Technically speaking, this is a short-term low that they traded below. It's worth marking up, even though it's small. Sell side liquidity right here. Price did trade nicely below a short-term low, and then we essentially respected that order block right there. It's like a bearish order block right here. The last down candle before they push up, we respected that pretty nicely, and then we had a continuation from there. So, given that they're saying that this is supposed to come all the way down here, and we are in a premium right now, and we're supposed to be buying, this level would make sense. You have to come all the way down here, most likely to the level where the breaker block would be, which is where the buy side liquidity is. I do expect them to possibly take out this low right here, this entire low right here, in order to get in on the imbalance right here. Since considering that, we'll watch this daily order block level and go from there. So we'll have to see. I do think that they're going to come take out this low right here, though. There's some imbalances just below here, and the last real major structural break was right here. So this would be our new dealing range right here. Let me see something real quick. Premium discount real quick. I'll just change this template to the regular fib. So yeah, they have to trade below equilibrium, which is right here, 50%, and there's a low right there at equilibrium. So that low is definitely going to be taken out, given that. So what I'll do is I'll not mark up that liquidity, but I'll just mark up where the liquidity is that needs to be taken. That's fine. So we got some sell side liquidity right here, right at equilibrium. And then below that is the 62.78% level. I do think that we're going to have a pretty nice retracement down. Let me change this template real quick. But so far, she's not ready. So yeah, it's going to trade below that low, likely into a order block or a imbalance, and go from there. So right now we are experiencing that retracement on the way down. We have expansion, retracement, consolidation, or my bad, retracement, consolidation, and then expansion again. So what I'll do is I will come down here and account for imbalances in premium territory as well. My bad, yeah, discount territory for longs. So it'll be one of these imbalances. It'll likely be the imbalance that's deepest in discount territory, so I'll wait for them to come and take out the low. There's really no more lows after this one and really this one right here. Let me zoom in a little bit. That are going to need to be taken. I would count this as a low because it was so defined, the wicks were. So it'll likely come down here and at least come take out to 123.801. And then from there, one of these imbalances are going to be respected and filled. You can use the failed bullish dealing range as a breaker block and go from there. So let's go down to the 15 minutes and check on GN real quick. So that's another potential. Sometimes these setups don't happen until later on in the morning session, and that's fine as long as you are in before 11:30 in the morning. That's all you need to really be worried about. What time is it? It's like 7:09, so it's 8:09 where I'm at. I'm expecting some type of aggressive retracement to the downside in that case, where the liquidity shift happened. You can use that as a what's it called? As a breaker block as well. So that's a few trades so far. We're going to. It seems like it's just kind of like this is what I mean by forex. It's really slow unless you're swing trading. Look at this price action. This thing's barely moved. It's barely moving at all, and it's one of those things that like. Look at those candles. Like when I first started trading, the 15-minute, you wouldn't even be in a trade for an hour and a half. Not even, because there was so much volatility. So the FX markets, by the way, are going to recover. But this is since the start of the pandemic. They've been slow like this. And I haven't been able to intraday trade at all. This is why I like to swing trade Forex pairs, and NASDAQ is and SPX are my intraday pairs because you can see the volatility in them. So price has come up. We haven't had price coming down. We do have DR confirmations to line up with bullish ones to align with our bias. So there's an 88+% probability that we'll be right on this trade. All right, S. Let's continue to look. I'll keep GU up in case she decides to pick up some steam and get ready. You got EN. Euro New Zealand dollar is wasn't ready the last time I checked. The other day, it was still coming down. Yeah, she's still coming down pretty nicely. So we have come into, so far last time we looked at this was only this price action right here. We come down and we took those lows out into a discount right here, which is this 50%. And so far we've respected this, this was a trade idea came from. We respected this imbalance daily breaker level. So what we'll do is we'll go down to up to the 1 hour, and we'll try to catch EN on the 1 hour today to be held in from for the next 24 hours or something like that. Usually it's only like 6 to 12 hours to be honest that I'm in a trade for that. We'll see. So we have confirmations. Since we do want to enter this on the 1H, and I already did the markups for perspective, guys. Going up to the daily time frame from a higher time frame perspective. This was a daily order block that was valid. That was a prime market terminal level. And then the rest are just going to be 4H breaker blocks, which were also the prime market terminal level. So I have on a premium discount fib. Price did come down and tap this breaker block pretty perfectly. And I went up on the 4 hour. That was where my trade idea came from on the 4 hour. Once we had the liquidity shift, it's the same thing for swing trading, except for the high is going to be more pronounced like this. And then we got the 1 hour time frame. So we can see that they were starting to poke these highs, the high at 174.049 right here, but they didn't quite get there. They got enough to have another liquidity shift right here on the 1H. So we will do that, engage that from here, and expect the 1H to come down and potentially tap this POI from there. So I would be looking for some type of displacement happening. I'd love to see that. We got a short-term low taken out, which is what we want to see, but I'd love to see a short-term high taken out as well. Just because if you don't have the displacement, then you will be a part of that displacement. So let's see. She traded above all of these. Technically, these are very defined short-term highs, so I would count them. That's the wrong one. Let's see. This guy can move out of my way, actually. So we have buy side liquidity here. That was taken. The reason why I consider these ones is because even though it didn't trade to 174.052, these are still very well-defined short-term highs that were traded above. But you do want to have major sell side, as you see taken here, and major buy side taken for your displacement specifically. So I don't think they're done poking above, and if I don't have that displacement, I need to see good reason that this is going to continue to the downside or the upside from where it's at. Displacement is a very important confirmation for me, because it filters out the liquidity take that happens before the drop. So what we'll do is we'll go down to the lower time frames to see what we have, but I'll draw on this 1H order block right here. That's obvious. That caused that push up that started that liquidity take. So we'll notate that. These are just not, when you pick a POI, it's the most probable. It's not definitely going to hold up. You know what I mean? So keep that in mind. As long as you have good knowledge, this should be no reason why it shouldn't hold up, but you want to make sure that your POIs are going to hold up. So I would wait for, this is fine. This is definitely the POI, because from here, what do we have? We had short-term low taken out, short-term high taken out. Technically, that's displacement, but it's not the displacement I personally like to see. We have DR confirmations, I believe. We sure do. Awesome. So this is 88% of probability that this is going to be low of the day. Inside of this, and right now we're inside of this 1H order block right here. So we can go down to the 5-minute, and we have DR confirmations as well. Price did close above the DR confirming that this is 88% probably going to be the low for the day, and this is the low of the DR specifically. So we have the 15-minute time frame with 5-minute time frame. Let's get out of this. We have the 5-minute time frame, and we have trading idea happened here. Let me turn this off for just a moment. Trade idea happened here on the liquidity shift once price traded above the short-term high here. We had a liquidity shift confirmation for that as well. So what we'll do is we will draw in the buy side that was taken. Technically speaking, they took buy side all the way up to here, and we can change that template real quick. They took buy side all the way up to here, but this is where the actual idea came from, was when it traded above this short-term high right here. So that's my trade idea. DR confirmations as well. Price is currently retracing pretty nicely, pretty aggressively the last half an hour or so. It started a very nice retracement down. Where would my POI be? That's a 15-minute. I would think that my POI would be this 15-minute imbalance right here. So we can fine-tune that down to the 5-minute as well. Let's see, 3-minute. I don't really like that price action, to be honest, on the 5-minute. It's kind of choppy compared to the 15-minute. Oh, get out of here. I will go charge you in a second. You'll be all right. All right. So we got the 5-minute, and I really don't like the 5-minute, the 3-minute, and I don't like to use the 1-minute. Sometimes when it does happen, I'll adapt, and I'll wait for extra confirmations for the trade. Nothing wrong with that. Get the 5-minute or 15-minute imbalance right there. This is the only case where I would use the 15-minute imbalance, is when the 5-minute 5 minutes really doesn't really show too much. The 5 and the lower time frames that I mentioned, they don't show too much. If there's one that's literally smack dab in your face, then you can just use that one. That's fine. It's a very rare case. Normally, when these setups print, they print to give you money, as long as you can wait on the execution. for that. So we get the 15-minute imbalance right here. Trade idea came from that. We had a short-term low taken out, major sell side, so you know that this is technically a strong low. This mitigation right here, and then we have the 62% context with that as well for the Fibonacci rejection, and we're below equilibrium. So we have a strong low right here, and this is the part where I kind of start to see the sell side was taken here. This is a strong low. Price should not have a reason to come back down here. Technically, this is a strong low. As you can see, it was not violated, and this strong low has yet to be established, to be honest, but price is going to eventually come back down here and create a strong low again. So EN is another asset that we can trade. We could probably target this high right here. Let's duplicate this, where the buy side is going to be taken. This is a major swing high that was created on the way up. So we can target that for a target. I like to keep my targets pretty logical, if I guess I should say, comparison to what's going on, especially on the intraday time frame. You don't want to be in the trade for hours and hours and hours. You want to be in the trade for as short as possible time. So you could put your stop loss below. Oh, come on, don't do that. We can do that. You can put your stop loss just below this low right here. Pull this down. Not expecting that to be taken because they already took out a short-term low right here. And then that ended up technically being, this low ended up being a strong low because price getting rallied up from there, didn't violate it, and then you took liquidity. So technically this is a strong low as well. But I want to wait for price action to come down to the POI so it establishes more candles inside of this POI to make sure it's valid. Once I see a struggle, price will have a continuation from there. Basically wait for the market to tip its hand a little bit more from an intraday perspective. Because if you don't, sometimes intraday can be a little tricky. It's very easy to miss levels of liquidity that you needed to consider and things like that, and that's kind of where you have to kind of put your concentration into it. So we have a target of this is going to be a very nice RR if we can catch this, maybe another 5 or 6%. I'll get in there, probably 6. Yeah, we can fit 6 in there. That's fine. We can fit 5 in there. We can go 1 to 5 and just stop just short. So we already have a potential 3 setups for long with fundamentals backing them, and just ideal targets. You know what I mean? So if we can catch 1 to 5, 1 to 6, or 2 1 to 4s, I would be very content with that. That'd be 9-10% for the week, and my goal for the month is 20% at all. So. If we exceed that, then that's just extra profit, to be honest. So we'll wait on that. She's currently shooting down aggressively, and we'll keep that in mind. Command Z. Command S. So we'll wait on that to happen. Price is coming down right now, but unfortunately, we don't have a lot of a heavy push that should be happening soon. But like I said, 1 to 5 here. Let's see. 1 to 5 there. So we have EN, GN, and GU right now. EN, GN, and then I gotta find GU real quick. We'll be checking on USD Swiss franc as well. GU as well. So this is from an intraday perspective. Likely a 15-minute time frame entry on all of these for a quick risk reward. If you notice, EN and GN almost have the same setup, and then GU is taken for freaking ever. So yeah, GU is taken forever. Pretty nice rejection right there. Like I said, we just took out that short-term low, so I do expect some type of retracement, but we need to come back deeper into premium territory. This would actually be my dealing range, technically speaking. So let me correct that. Well, why? Because this took out liquidity on this side of the market from a sell side perspective, all the way up here. See if we can find a valid 1 each POI. Oh yeah, I did say considering. I remember I said that considering the where the equilibrium was and where the actual predicted level was, that it was very likely that this level of liquidity was going to be taken out. So they were likely traded below 123.766 at least a little bit. I remember that now. And then we can search for one more. I like to have 4 or 5 on my list for intraday, including NASDAQ. And what I'll do is I'll let me go plug this in before it dies. Forgot about that. 4 or 5 on my list for intraday that are high probability trade setups for 15-minute entries. And once I have those on my list, I will kind of just watch those. You know, once you have your analysis done, it's pretty much a waiting game to see if your POIs are going to hold up, which they should. These are the rules the things that I teach you are pretty much factual, and every time someone loses on a trade, it is usually human error or news, one of the two. And that's the same thing with myself. If I lose on a trade, it's human error or news. I miss some liquidity. New Zealand dollar Swiss franc, for example, that POI looks very, very nice and promising. But unfortunately, I must have missed that as a level of liquidity and or news. I haven't checked that one yet because gold is gold's taking over and recovering all my losses. So I don't mind starting off the month, you know, kind of like average, I would say. I lost 2 trades so far this month in order to win 1. But that 1 I won on is just 1 entry is higher than the 1.80% overall loss between 2 trades. So for overall for gold, I'm gonna get 4-point-something% out of that first entry if you count my losses too. And let me set this right here. When I'm able to get a second entry on gold, because the USD is not going to be going up anytime soon, I'll be able to give it for another 6 or 7% and just repeat that and abuse that pair for the next 3, 4, 5, 6 months. So I would say no, like three months at best. You're going to be able to abuse that pair for how long. But then after that, once the USD is like doing well, we know what we can do. We can abuse gold again for a short, because USD is doing well, gold is short. That's why I like fundamentals, because long term, even if you intraday trade, you can have these backing up your trades and know exactly where something is going long term. You know, 2, 3, 4, 5, 6 month outlooks, and you can print money on one pair for quite some time. 2 or 3 entries could equate you, you know, let's just say you do 3 1-5s, there's 15% on one asset. Imagine having a goal of 20% a month, and you just have all your focus on 1 or 2 assets for the whole month, swing trading or intraday trading, but let's just apply this to swing trading. And if I only touched gold this whole month, I would still crush out at least 30% with just a few entries. So some advice to you is, every day when you wake up, don't try to trade a new pair every day and start your analysis from scratch. Once you have a bias and a direction that a pair is going for the week, with fundamentals and just long term, I would recommend abusing that pair all week, because it's set up every day. Abuse that pair all week, or maybe just a few pairs all week, and then you're good to go. You don't have to do as much work and as much figuring out when you know where things are going. You could scale in on the 1H all week, and you get like 3 entries, and be like, well, these are 1 to 7s a piece on the 1H, so 3 entries over 2 or 3 days, and then you got 14, 21%. You know what I mean? So long term, it's really good to use fundamentals to take advantage of a pair long term. So we have a few pairs that we are looking at. I'm close to this one. I can bookmark it. I like to bookmark all these articles so that if I ever need to reference them, I can. So we have GU and GN, and I have my trading plan up as well. Like I said, this does need some slight editing, but not much. Let's see here. Let's try to find at least one more pair. GU is probably going to be the least likely to be a thing, and EN and GN are in the middle of retracement right now, so we just gotta wait for the POIs to be met. AUD USD is short, very short. Let's see why. Sometimes things happen overnight, you know what I mean, or in the morning and things like that, and then you don't know until you wake up the next day. So that's why you always have to read first. Look at that as negative news. Just on the 5th, this is why AUD USD is going down. So a little bit of reading to have some fundamentals backing up. New Zealand dollar rise rate hikes, while the Australian bank pause rate hikes. So highlights. New Zealand dollar raised rates hikes by 50 basis points to 5.25%. We already discussed that. That is a negative thing. RBA paused rate hikes, but remains committed to returning inflation to target range. NZD initially rallied, but retreated on RBD NZD's dovish forward guidance. So I did say I was gonna get my leg back for NZD USD, and that's exactly what I plan on doing. Or NZD Swiss franc, I think it was. That's exactly what I plan on doing. When I know a pair's direction, I don't let things slide. You want to stop me out, that's cool. I just come back for revenge and take you out. So let's go New Zealand dollar Swiss franc, and let's look that pair up and see if it's still bearish. And I'll look at AUD, NZD too, and the other Australian dollar pairs to see why they're mostly selling. Or no, right, that's NZ, New Zealand dollar Swiss franc is what I meant. New Zealand dollar Swiss franc. All right, let's look at the news first to see anything. Not really. Not really any change in news to be honest since I last looked. Custom. Make sure there's no reports coming out. My bad. I'm jumping ahead of myself. Make sure there's no big reports coming out. We did have an interest rate decision. My bad. We had New Zealand dollar interest rate decision coming out. It was a positive thing. That they raised interest rates. I don't know why they would mark that as positive. It's never positive for having to raise the interest rates. That's a weird one for me. I'll have to look that one up. That's a very weird one for me. Okay. Anyways, New Zealand dollar Swiss franc. We did have an interest rate decision. They raised their interest rates from 4.75 to 5. Which is higher than expected. This is higher than actual forecast. So essentially, central bank economists will put out a forecast for what they think based off of the last one and based off of what the leader of the central bank actually said. But instead, they came out 0.25% higher. The reason why they had to do such a high basis point rate hike, I can't talk today. More coffee. Rate hike is because they're combating inflation. You'll see only 0.25% increases in increments of 0.25% when they need to slow down. So also liquidity, a little trick. In order to not miss liquidity, you have a big impulse move, you're in your dealing range. In order not to get tapped out, I almost forgot about this trick. You can draw it almost as a trend line. Anything under this trend line is going to be liquidity. As you can see, price traded above that and took out all those highs, even up to here. Anything that's below this trend line, from like let's just say the valid order block right here, I like to connect them, is going to be liquidity. And you can use that to filter the liquidity as well. It's a really good way, because some people are like, well, they took the high up here, and this would have been a good short to get into for a small 1 to 3, but eventually the real actual move takes out all those highs. So I'm not saying that this is not valid, and this is not valid right here. After it took out the short-term high, but eventually the real move, it comes back into a nice discount. And as you can see right here, this is a daily imbalance right here in the purple. So let's look at New Zealand dollar Swiss franc real quick, because I was planning on, if the setup allowed itself, I was going to force anything. Gotten a long entry. So we do have a predicted candle today. Prior we did not. We have a low of 0571. So let's go look at 0571 on the daily time frame. This will be likely a 1H entry. I like to get it, smack out at least 5% from this trade on the 1H, considering that it was supposed to be a swing. Every time I get stopped out of a swing, to me, it's just an intraday opportunity potentially. So long as me being stopped out of a swing was not having to do with like news and things like that. So let me, daily, it was 0571, I believe it was. Yes, 0.571 even. So I'm gonna find that point in 571 even. Should just auto correct. Perfect. So this is 0571. They already crashed through 0571 just recently on this recent daily candle today. What could I do? I could enter right here. Technically, this is going to likely end up being an order block, but I do not want to do that. The swings already stopped me out. I'd rather enter on the 1H because it's going to give me a more solid RR. So we just took out that short-term low. I would feel very confident given the predicted candle setting an actual limit order here, and considering that we had displacement higher here on this swing high, and now displacement lower here on this swing low. And that's essentially what you have to wait for. And so as you can see, Me getting stopped out on the 4 hour the other day. I believe I have a picture of that. This is just a L lesson. I always pull out all my pictures. Me getting stopped out yesterday, this was not a bad trade at all. I did everything right in terms of liquidity and things like that, but I did not anticipate this high right here being taken out into the fair value gap, and the fair value gap being digged in deeper, considering that they did take the liquidity from here, and that just goes to show that that internal and external range liquidity, it's a real thing. It's just buy side and sell side liquidity, but internal means like they're going to take out all of the liquidity inside of this area. Internal. External means they're going to take out all the liquidity down here on these lows to outside. So it's like internal inside of the impulse move right here. As you can see, it's kind of like a little fishbowl inside of the impulse move right here, dealing range. External, it's outside of the dealing range. All these lows right here, boom, boom, boom. It's outside. So you can think of this as a house. If there's a little guy right here, I don't know. I like to use things like this. If there's a little guy right here entering his house, right? He's going to enter the house as internal, and then when he exits the house to go actually take liquidity, that is external. He's going outside of his house to take the liquidity. And you want to be in on the external liquidity chase, and how that works is that means for every dealing range, right? All of the lower highs in that dealing range, this one, this one, this one, this one, and this one, all of the highs created in that dealing range up into premium territory for shorts is going to be taken 9 times out of 10. So that's just a little liquidity lesson on how to filter liquidity a little bit better. I almost forgot about that trick for quite some time. Actually, it really works really well. So buy side liquidity is, I'm just going to pull this over here, and I'm going to mark up a few things like my displacement and things like that, so I know where they are. Displacement higher, because like I still knew I was correct on direction and things like that. So what I'll do is from now on I'll start to consider and watch the internal liquidity and marking up my buy side liquidity just like this. And same thing with my sell side liquidity. Sell side liquidity just looks like a bullish trend line. Look at that. All the lows. Boom. Took that out, and now we have a retracement coming. So I'd feel very comfortable setting a limit order, considering that they have to come and take out all of this liquidity, the rest of it right here. So they took out this one. They took out these ones right here. You can see where the crosshairs are, but they have not taken. They've taken down to here and down to here, but they haven't came to take down this low. So I like to mark up where they have taken. They've taken all of the the external range liquidity within this range, except for this low. So you can expect them to come take that low. If you don't want to keep that there, that's fine. But I like to use that as like a measurement for that. So they're going to come from that sell side, and there's also actual daily sell stops right here, which is exactly where my target is. So that we're going to rely on the daily doing that as well. So what I'm going to do is, this is displacement higher. Let me make sure I get my displacement lower for sure. Let me see, because they traded, this is the impulse move, so this is displacement lower, displacement higher. Displacement lower, here it is. So we had displacement lower right here, displacement higher. They took out these lows right here. If you wanted to duplicate this and just mark up the sell side right here as well like that, you can, but it's easier to account for when you have like this, because it's just, for me at least, easier to think of. So we have that happening. We obviously had displacement on both sides and liquidity taken on both sides of the market from this daily imbalance, and this is the daily predicted level, and or the blue is and or a breaker block. So we're going to go here and expect, and this is obviously a strong high as well right here, this one right here, this wick where it wicked out. Let's put that there as well. Boom. Okay, so according to my trading plan for shorts, right, when it's traded above old highs into premium territory, order block, or fair value gap. Okay, well, check. Daily order block above literally every single high right here possible, relative to this dealing range right here. Took out every high possible, including this one right here. Okay, we got that check. And what else do we need? This is literally, when you have a trading plan, this is literally what you should be doing. Daily time frame footprints are already accounted for because I've already done the analysis. Since we are entering on the 1H, we still won't be skipping this, but 5, 4, 3, for if you're entering a 5 minute or 15 minute, these are things that I need to see. These are things I need to see in structure and price management, risk management, time of day, and if no trade by 11:30 a.m., then there's no trade. And this is my setup for an A+. I already gave this to you guys. Previous daily candles high, low, traded above or below, or into an institutional footprint. Daily context has to have to go lower or higher. Order block for value gap liquidity pool. 15-minute time frame displacement higher and lower. This is for our entering on the 15-minute, but we also recorded this confirmation on the hourly. Order block is coupled with the fair value gap. Let's see. Sure is. Fair value gap right here, order block right here. So that's check, check, and check. We already got the displacement. We can replace this for whatever time frame you actually are entering on. Order block has fair value gap 5, 4, 3, 2, 1. So this is what the step that we're currently on. So I'm gonna go down to the 5 minute to see if there is an imbalance. And as you can see, the candles break down significantly more, and there's an imbalance that was filled and respected literally right here. So that's just a POI you can look at. I would say from here to here, a very nice imbalance that was filled and respected. We got 5 minutes fair value gap right here, and then we can go back up to the hourly. So with a 5 minute fair value gap right there, price did come down and take out these lows right here. This is that sell side liquidity right here that they came for. What I'll do is this, because I like to think of my liquidity like this. This is all the liquidity they also took right here. So this is a part of like the pool, lower time frame pull on liquidity. It's low right here, and I won't mark that up because I can just visually see with my eyes that they're gravitating towards that low. But this is the sell side liquidity that they took, right? They took out a short-term low, and now we're having a retracement back into a POI, in which, yeah, I could set a market limit order, but I really haven't been liking my limit orders lately. I need to. It might be partially because I can barely see out of my left eye, but my limit orders haven't been hitting like they normally do. So I'm going to be doing more market executions until I back test some more with those limit orders and figure out why. So I just basically just review my last 5 losses having to do with limit orders, my last 10 losses having to do with limit orders, and see why I got stopped out of those trades. My wife's texting me. Give me one moment. So this would be a 1H. Terrible. Give me one moment. I go check on the other trades as well, since those were 15-minute time frame. You don't want to keep your eye off those. Okay. So we have 5-minute imbalance there. Let's go, and I want to find a better 5-minute imbalance, if I'm being honest. There was also one right here, and that's relative to the order block. So you know what I'll do? I'll go to the 1H real quick. I will draw in the actual valid POIs on the 1H, and then look for 5-minute order blocks inside of those. So since we have all liquidity taken on both sides of the market, and they literally have nothing else to do but to continue from where they're at, this is an important order block right here, and this is also an important order block right here. Sometimes I will mark up 2 and just kind of classify it as a chain of order blocks that were respected. The reason why this is an important order block is because the next order block that was created was the one that mitigated that. And once that one was created, we did have that very nice push down to take out this low. So this one was responsible for the start of the push, right? That's why that is significant as well. So usually what will happen is price will come up, and if it is going to mitigate this one, it'll barely trade above this one, you know what I mean? Or it'll pretty much mitigate this one perfectly like it did and not ever trade above this premise of this high. And whether you put your limit order aggressively right here on this one or aggressively right here on this one and have your stop loss just behind this high, you are going to want to make sure you have a protected stop, right? Because price should not have a reason to come all the way up here given it took liquidity on both sides of the market. So that being said, once this reaches this POI, the first one, I'll start to look for bearish price action on the lower time frames in order to do a nice market execution. So yeah, both of those order blocks had 5-minute imbalances in it. I'm gonna draw them both in because price definitely could come up to the other one, even though they're not too much of a difference of each other in terms of like distance. 5-minute fair value gap. I'm gonna draw them both in because sometimes they'll be both filled and respected. And then there's another one right here as well. That's an untouched one, so this one is actually most likely going to be the one because it's untouched. And we're going to go here and go back up to the 1 hour, and we can just draw this over in time so that you can actually see it, just a little short of the actual words. So there's two imbalances right here in between the two order blocks that would be valid on the 1H that we plan on entering in. Here is the short-term high that they're going to trade above. This is a lower high right here. So there needs to be a short-term high, some type of buy-side liquidity to take before they move down every time. Buy-side liquidity. So as you can see right here, the same thing happened. Price did trade above all of this. Buy-side liquidity taken to an imbalance. All of this, literally all of this, into an imbalance right here. Technically, it was right here on the left. But overall, I went back into the daily imbalance, and then we had a continuation. So we took liquidity on both sides of the market. And now we're starting a retracement starting. We should have positive, negative price action right here on this POI. Get back in there. Let me check on this real quick. Perfect. Let me pull out my kill zones. I'm gonna see what the kill zone is for the day. Kill zone is up here for the day, so we will see if price comes back up to tap this imbalance or not, but I do not think so. We will keep that noted and come back to that in just a few minutes. That's New Zealand dollar, Swiss franc. Let's go to London. The time of the day that you're trading actually matters too. The algorithm runs these. Give me one moment. All right. So from that point of view, and then we can also check the 5-minute for DR, IDR confirmations as well. That does apply to 1H, and we do have that. If you zoom in here, you can see on this current DR, IDR, price did trade below that DR, IDR, confirming that this is likely the high for the day. And considering the data on New Zealand dollar Swiss franc, that's very likely accurate. So 88% probability when you have that that tool in your bag that the high and the low of the day is established. That's what it measures. So right now we're pushing that short-term high that I was mentioning. It'll likely come into one of these imbalances. Once I see some bearish price action, pretty easy market execution. It should not violate the premise of the order block that was respected. But I'm waiting to see which order block because I want to have a pretty good entry on this. And this will be a 1 to 7, by the way. Let's go look at the other pairs real quick. Trading in a nutshell. That's the wrong one. We got London and ENGN. So they're making very good progress down, starting to get a little bit more aggressive as the time goes. So we're pushing this low now at 197. We're gonna keep going down and go from there. So I'll probably capitalize on just 2 of these. When they do happen, it'll likely be that 1H one since it's already on its way, and then one of these ones that, you know, whenever price action gets to our POI, it'll be one of these ones. And if I can get that 1 to 7 and then a 1 to 5, that's good enough for me for a Wednesday because I could still repeat the same process tomorrow and catch similar setups, and then potentially do another 5 or 10%. So these ones aren't quite ready yet. NZD Swiss franc seems like it's going to be ready first out of everybody, given how aggressive she's being right now on that push up. So It's one of those days where usually Tuesday, Wednesdays are the days that the real moves actually happen, and after that, the manipulation's done. I don't mind not getting into a trade on Monday or Tuesday because you have to actually trade the setup when it's actually ready, and not when you want to, just because it's a trading day. A lot of people have that mindset where they're like, "Oh, today's Monday, I got to trade." That's fine. You have to trade, but like make sure that you're not trading setups and forcing it. Make sure that you are waiting for confirmations and things like that. So far, this is qualifies, according to my trading plan, as an A+ setup. Premium discount territory, all of that. So if I do my fib here, premium discount territory, let's go from this wick right here to here. We have optimal trade entry as well. And price is gonna push above that equilibrium. Take out that buy side right there into an imbalance. This is going to be a pretty comfortable trade actually. Now, if price trades up to the kill zone, I also wouldn't be surprised, but I don't think that 057793 is going to be reached given the predicted level today on prime market terminal and the price action that we have as well. So, kill zone is all the way up here. New York kill zone on the 1H has not been fully established yet. It's actually just starting. 7, 8. It's actually just starting, technically speaking, so we'll watch price action around this POI just to make sure that it doesn't make it all the way up here to 057. And if I see a ton of struggle, I'm going to execute the trade because we have a lot of confluence, including optimal trade entry in our POIs. And it's out of our daily range, so going to be a solid trade. I sure wish this would poke up more. It's going though. So this is a part of trading that 99.9% of people can't do, and that's the whole waiting part. And I used to expect the same thing, you know what I mean? They expect the setup to just be ready. It just be like as soon as they wake up, it's just there, and they just gotta hit buy or sell, and then they walk away. You know, there are some times where I've waited 3.5 hours for one 15-minute setup because of how slow it was. But once I got into the 15-minute setup, it smashed TB within a couple of hours, and it was worth the trade, obviously, because you make money off the trade. So patience is very key. You have to have particular attributes about yourself, or be disciplined enough to develop those attributes about yourself if you don't have them. And those qualities about yourself if you really want to be a trader. I used to be, and I would think of myself as still being extremely impatient. You know what I mean? Like I hate when price is moving slowly and things like that. So this is something that I'm personally working on because sometimes my brain I can get a little ahead of myself, and especially from an intraday point of view, I can get a little ahead of myself, and I'm like, oh, you know, it made it almost all the way up here to the POI. You know what I mean? And I'll just still right here. I still deal with those things. You just have to be able to recognize those things, and you know, just know that your brain's trying to work against you when it comes to trading, and you have to rewire your brain in order to trade. Most people aren't taught patience and things like that when they are growing up as children, so it's a bad time. It's a bad time. So that will reflect in your trading and things like that. Oh, come on, poke a little harder, bro. You literally don't even have that far to go to hit the POI. New Zealand dollar Swiss franc likes to play sometimes. Practically same setup. This is a very nice entry right here. We're tracing again to another POI. I'll take a look at some of these too, but I feel like between New Zealand dollar Swiss franc and the other two pairs that we are looking at, there's going to be some nice setups. So kind of cut the work in half by, you know, not doing so much analysis, because the less you have to think, the better. If I have to only think about 2 or 3 pairs at all, and I know which direction they're going, and that's very likely that I'm going to be correct, I don't need to do anything else, because once those pairs are ready, like I'd rather wait on 2 or 3 pairs than wait on 8. You know what I mean? I don't like to have a lot of options because it doesn't take that many trades to be profitable. You know what I mean? It doesn't take that many trades to, like, you don't have to trade every pair that you see that has an opportunity. You just need a few of those a day. Even if you just go for 4% per, which is a very nice RR, that's in your year 2 for 2, that's 8% right there. You know what I mean? So these ones are developing nicely. Not as London session progresses into the more volatile portion of its session, we will start to see harder and faster and more efficient price action. So we're going to wait on a couple of small confirmations once the POIs are met on the 15-minute. And once we have those specific signatures from our POI, it'll be a very highly likely trade to be able to execute. So we are currently in waiting zone, and while we are waiting, I'll be doing a little bit of education and teaching, just to show you kind of how I operate when it comes to my own trading, especially from an intraday point of view. Because intraday can be tricky, and there are some people who aren't profitable simply because they are trading the wrong style. You know what I mean? They want to be an intraday trader, but it's just not in their personality type. You have to have a particular type of personality to be an intraday trader. And if you don't have that personality, like me, I have lack of patience, so I swing trade, right? And it might sound redundant, but like I can positively set a limit order and on the 4H with confidence and be able to get into that pretty nicely as long as the displacement and liquidities has been taken on both sides of the market. I can confidently say, hey, you know what I mean? This is going to be a 80-85% chance, given all my confirmations that this is going to be a positive trade. I'll take that risk, set the limit order, and then go about my day. I used to do that on the 15-minute as well, but I got less efficient on the 15-minute, I would say, because I switched to being more of a swing trader. I started off here trading on the 15-minute and entering on the 15-minute and analyzing that way, but I decided being a swing trader was better for me considering the size of my family and how young my kids are. Being active on the charts literally every day, it just doesn't fit my lifestyle. And personally, I want to do a lot more like relaxing. You know what I mean? When you go through a lot of stress in life, you just want to relax after a while. You know what I mean? Prior to me being a profitable trader, my life was decently stressful, I would say. You know what I mean? A lot of financial problems and things like that. So that is the reason why I did this, is for the freedom potential and to be out of that. So and to be out of debt and things like that too. So a lot of people have different reasons why they trade. I personally just wanted to not have to go to work and be out of debt and have freedom. You know what I mean? And my family to have a better life. That's literally it. Everything else is really obsolete. And then eventually, I did it for those reasons at first, but then now after a while, you develop a love for the game, and this becomes kind of like not who you are, but like just what you do. Like your title is I'm a professional trader, right? Your title is I'm a professional trader, and in order to do this full time, you have to make sure that you are consistent every day. So my only secret to being really profitable is showing up every day. You know what I mean? And not expecting perfection out of yourself, because it's not going to happen at any point in time. You can be efficient and win 5 in a row, but you're going to eventually lose. It's part of the game, boys. It's a part of the game. Let's look at AUD USD, because we just looked at the fundamentals for that. This is gonna be the last one that I'm kind of looking at. It'll likely be a 1H entry. Oh, get out of here. So AUD USD, we did the fundamentals on that. It was because of the rate hikes that were had, and the majority of retailers, 70% of retailers are long, no predicted candles. AUD USD, I would be specifically using these levels. So we have the two most important is 070 and 067 and 064. That's where price action actually is. So 070. Let's go look at 070. 070 is right here. Crazy enough, this is where where it failed. Pretty much right here is where it failed. It is way up here. Don't even know if I like that. 070 level right here. This is what I'll do. 070. Come on, bro. Whatever, I can fix it. 070 level right there, and this is a supply and demand level that lines up with the imbalance that's right there. I will be fixing that in a second. So we got 070, 067. Let me just duplicate this.
Yeah, I'm about to take a shower.
067, and then we have, that's the wrong one, 064. So I like to look at these levels because they are AI generated levels and they are smart. That's 064 actually. That was the level, the last one. 064. Zoom out. So these are the three levels that are going to be the most important in pertinence to the price action right now in terms of that, and I like to see what they lead to. You know what I mean? What are you leading to? So this level is obviously going to be a breaker to me because this is a failed dealing range right here for a bullish situation. So the breaker would be right here. I'm just going to do body to body. So we got a daily breaker right there. And I'm not going to mark that up as a daily breaker, but well, it's just the last structure break. This is a failed dealing range, bullish dealing range when that happened. So that's one level. I'm not going to draw this one up because I know for a fact the daily is not going to take its time going up there. It's just levels to be notated, the ones that are still in the horizontal line, but this is going to be the most significant level. So what happened here, right? This is a breaker block. What happened here? Price came up and tapped into this order block right here on the daily time frame, which I'll just draw that in with a rectangle because of the wick is so so thin, the wick. One day right here. Perfect. So that got respected. We have a breaker block right here. Breaker blocks really aren't valid until price tries to trade below there and then respects that breaker block. So going down to the 1 hour, currently we have that being rejected as a sell. You have that being rejected. The reason why is because once again we broke structure right here to the upside, took buy side. We're currently in a bullish dealing range on the hourly, technically speaking, and this imbalance right here was respected for the retracement right here, back to the upside. So eventually, yeah, they do have to respect some type of bullish price action, bullish footprint in order to have to even start a retracement. But we had a 1 hour chain that ended up being a thing right here. So that was respected pretty nicely. They took liquidity there. That would have been a great sell opportunity, but we missed that at 10 p.m. last night. Where is the 1H? Here it is, 1H order block. So we have that ended up being a thing, but then price came down and took major sell side again. So we have a new dealing range right here. So we get to mark that up real quick. We got buy side liquidity right here. And then sell side liquidity was taken down here, giving us a new dealing range. Price is not very likely to come up to the old order block. It's more likely to come back to the POI and premium territory in relative to the last structure break, which was right there. So we'll draw a premium discount fib real quick to see where our POI is likely to be. What do you know? 79% level lines up perfectly with that 1H order block. That would be the most likely scenario. Not really a coincidence. So it has to trade above equilibrium. I do not think it's going to tap this fair value gap. I think it's going to come in and tap this order block given the situation. So we'll wait for that to happen. And AUD, USD, we might be able to get 2 entries on before the week is over on the 1H. Stops just above this high right here, and we can see if we have DR, IDR confirmations. Yes, that's where the kill zone is right there, and that makes sense for that. So price might come back up to that kill zone at best. We'll see if it violates the premise of the body of this bullish candle. I know that this is going to be the proper order block instead. So it could be really either one of those, but this is the most likely one. I always go by the most probable one. It would be better to get entry right here because then I can put my stop loss a little tighter, maybe 11 pips behind the kill zone, and then we can drop price and target this low and do a 1 to we could do a 1 to 9. That's fine. It's not very uncommon for 1 to 9s to be smashed on the 1H and only take like 7 hours, 5 hours, whatever the case may be. As long as you get into them during prime New York session, you shouldn't have a problem holding these for 6-7 hours, maybe at best, until you get what you want out of it. So another potential, we currently are experiencing that retracement. I would like to see some more context for this trade in terms of liquidity, I want to see a short-term high be created so it could be taken out into the POI. So you would have buy side right here. So far, there has not been one established yet. Sometimes liquidity does need to be engineered. Geez, nice. That's crazy. So sometimes you'll have liquidity that needs to be engineered before you get in. So there'll be a lower high created on this big impulse move to be taken out because it's obviously going to be buy side. And if you know that there needs to be a buy side liquidity take before the move and a lower high hasn't been formed, then that's likely going to end up happening in the coming days. So AUD USD is another one. I probably won't consider these. There's just too many options out here. Great pairs. So we have two pairs for 4 pairs actually right now, to be able to hop in on different time frames. GU I'll probably get rid of as well. And if I can end this nicely, if I can end today and maybe tomorrow nicely, that's pretty much the week. You know what I mean? No need to trade on Friday. It's a little bit too slow to justify trading on Friday. Thursday overnight and going into Friday is really the last day that you can trade, that you should trade, other than NASDAQ. What time is it? NASDAQ just opened, so that's another pair that I've been kind of studying the price action for the NASDAQ for a while there, and trying to get that short that I want on it. Jeez, okay, trying to get that short that I want on it, but it doesn't seem to want to be a thing today. It's been very choppy, the price action, the last couple of days, so I'm not a fan of that. This might be the wrong vendor. NAS 100 USD. I think it was Pepperstone that I was using before. Sure was. No, was it? Might have been. Couldn't remember. Anyways, I was going to do that from scratch anyways. It's fine. I was going to just take that out. So for NASDAQ, I like to go straight to the 5-minute real quick just to see if I already have DR, IDR confirmations. So this is an example of DR, IDR working very nicely. In this session currently, you had candle closes below. Confirm that this with 88% probability is a high of the day. You did not have an actual body candle close above that. So it technically didn't violate that in terms of candle closes above, and you've seen price action reject. Take that as liquidity and then reject it to the downside. I would wait for the 10 o'clock DR, IDR to actually form. This is like overnight London session finishing up. So this is like not a great setup, to be honest. I don't like this price action. I do like the fact that they cleanly took those highs, but they did take the liquidity on the DR, IDR. But the rule is that once you have a candle close below, that's a confirmation that this won't be violated too hard. But it did end up taking this out, which has surprised me actually. It ended up taking that out. This must have been some type of news or something like that in order to fill this imbalance right here for the continuation. So we'll have to see about NASDAQ today. I'm not sure where she's going, but it does look like overall the daily is coming down possibly to fill this imbalance right here. There's a bullish imbalance right here. I wouldn't be surprised if the daily was coming down to tap that right there for a long potentially. If not, then the daily is definitely coming down to trade below all of this if it is indeed short from a daily time frame perspective. Something like this, if I have a bullish imbalance right here, for example, and I think I'm short, I'll wait a couple of days and wait for this to fail and be like drove through by the daily. You know what I mean? So if it drives below here, then this could be an imbalance right here that I could respect, but I highly doubt it given the context for the trade. So AUD USD to the downside. Might be able to catch a 1 to 9 on that. It'd be crazy. I've caught a 1 to 7 on Great British Pound Swiss franc pretty easily. And this is the daily on the gold. I'm hoping gold. I'm expecting gold to come back down for sure. There's no way you can trade above strong highs or highs like this and not come down eventually. You see that price action is getting a bit more choppy. Eventually, you'll have price plateauing somewhere up here and you'll see some exhaustion somewhere up there, and then we'll start to get a retracement below the short-term low. If not, worst case scenario, we create a new high such as this, and then we take out that high again, and then we have a brand new dealing range, and then we can adjust our second entry to that dealing range, that new dealing range. So this is just what I expect based on the liquidity takes that that had to happen. Move this over just a hair because we already know that happened. And this one too. Let's zoom in a little bit. This one as well. Well, dang, you're not gonna let me do that? Okay, let's send it back. That's fine. That one can stay where it's at. I don't feel like moving my RR tools because they're like set in place. So we'll see. Sometimes it takes a week for a pair to come back down and then tap your second entry in your POI. I expect that imbalance to be filled essentially, as I explained. Let's go check on our pairs that were prepping themselves. So let's see. We're gonna wait for that to happen and that to happen. So we have 2 potential 1H entries, and we have a few potential 15-minute entries for an intraday kind of day. I will be staying here until we at least get into one trade, unless something crazy comes up, which I don't anticipate. Your CAD's a weird one, man. Your CAD is not. It's taking its time, but it is starting to go down. I'm not sure why your CAD is being so slow, but you should have definitely positive price action from this POI, so considering the strong low that was formed. Let me try to go to these pairs since they're going to be the most immediate, apparently. Are you ready yet, guy? Heck no, you're not ready. So they're both experiencing pretty much the same move because they're both New Zealand dollar pairs. You can see that's pretty similar. New Zealand dollar pairs. So we'll see how she ends up, but I do anticipate it's so slow right now. This is why I like to trade NASDAQ so much during the day. But these are still valid pairs. So we'll wait on those to happen whenever they do and go from there. CAD Swiss franc is due for a retracement according to prior market terminal. Like I said, I do expect those highs to be traded above as shown. We updated that, and I have my stop loss just behind this high right here. I don't expect it to come way up here, considering the breaker right here, the fair value gap, and the actual predicted level, and then the price action. So we will see. New Zealand dollar Swiss franc. If I only catch New Zealand dollar Swiss franc today, or that's fine. I'd rather catch a 1-1-9 than a couple pairs that are just taking forever. Long story short, so we're gonna count on that. We're count on that high being pushed above and everything. I really don't see anything else crazy today. For setups, these are gonna be the best ones that I could really realistically find, considering that I already had some context to these trades already. Almost forgot I had coffee. To see my battery percent. Let's go to NASDAQ because this is killing me, man. The slowness of forex pairs, like actual forex pairs right now, is insane. Normally forex is insane. It's very volatile normally, and I'm not sure what's going on. Let's go. Except for the fact that we have the world events that have been happening. The state of the world economy right now is not very good. Indices. We have NASDAQ. Let's see. I'm gonna check seasonality and things like that. So we have pattern scan. We do have bullish predicted candles. Okay. And it kind of looks lined up with that price action that's currently sitting there right now. Oh, give me a good old load. You're not gonna do it, are you? This range tool pretty much just helps you scalp, but I'm not interested in scalping. I'd rather intraday trade. That is nothing. I don't use this. I used to use this right here, but I do not anymore in my trading. I'm gonna have to sit in the office because they're vacuuming in here. Terrible. I'll be right back. 2 seconds. Put my phone in my pocket. It's quite quieter in there. I just like to sit out here because it's nice. But not today. I'm gonna buy a building eventually. This is a shared space, like one of those co-working spaces. We go in here. Perfect. And this room is pretty well soundproofed. You really can't hear much in here once the door's closed. All right, so and then what we're going to do is take NASDAQ most likely long. DRIDR works really well on NASDAQ. We will check the seasonality and things like that, wherever that may be. Events overview. Seasonality, here you go. So seasonality is currently bullish as well. That's what the bullish predicted candles they're expecting from. They're expecting the next several days, and this is the probability that this is going to happen for it to just spike up. So seasonality matching it with the bullish predicted candles. April tends to be extremely bullish for the NASDAQ. We will see. So I'm gonna look at the daily real quick. Just to look at the daily, I'll look at the hourly. Actually, I'll start off with the hourly, just because the daily on NASDAQ does not usually give me very much up and down price action in reference to what I need to see. But I will, however, draw on liquidity, and where it would be coming from would be, if this is truly bullish, it has not taken, or it did take out these highs, so the next level of highs would be 13,548 and then 13,720. So I'll go down to 1H right away, considering that this is not going to break down. And we're going to look for longs here, and we're going to see if the DRIDR is going to help us with a further confirmation to everything that we already have. So this is buy side liquidity right here. The last thing that actually happened in terms of major liquidity was buy side structure break. Price came up, took that, and now price came back down and respected that. Prior to that, price took out a short-term low into an imbalance and then shot up, and that caused this entire impulse move that took that out. So you have to think about what's happened, and then you already know the rules and parameters as to how liquidity moves. So it's like, what's going to happen next, and what do you want to see before you get into the trade, right? What do you want to see happen before you get into the trade? And you already have those parameters set out as well. If this is, I need short-term low to be taken out before I get into the trade. Let's see, we have 1H for value gap right here. That was respected. And then we can draw the sell side liquidity right here. I'll just duplicate this real quick. It just makes things so much easier. And then you can just change the template. Took out short-term lows right here into this imbalance very, very beautifully, but there still was no confirmation because this was the retracement. Once you have this happening, that's when you would be in the idea. So price came back up, took out the liquidity here, came back down into a discount, and so far we had this very beautiful order block right here. And even though this is not bullish engulfing, you don't have that, but you also have one down candle before the move up, and that is also an order block. We got 1H. Sometimes I can't find my own stuff. And what happened there was the exact same thing, same setup over and over again, repeats itself. You just have to wait for the parameters. Short-term low was taken out. Short-term low was taken out. Did I leave my phone over there? I sure didn't. Short-term low was taken out into the imbalance, or into the order block, my bad. And now price is kind of dancing around in that same area. So you know that this, given that this has happened, this is the opportunity to, relative to liquidity, marking up your strong lows. That way, you have your dealing range. You got your strong lows and highs will establish your dealing range. Your dealing range will limit where price can go, and it makes it really easy for you to dial in. This is a strong low as well. So once again, for strong lows and strong highs, if there's a new one made, that's the newest one that's valid. And if, as you can see here, and move these up a little bit. As you can see here, price came up, did not violate the strong low. That at that point that it did not violate the strong low and move from that, that's when that strong low is established. Until then, this is not a strong low. This is a potential strong low. It has potential to be a strong low because it took out a short-term low, and now you know what it has to do next. It has to take out a high. Once it did take out that high right here, that's when the strong low is established, right? Liquidity on this side, liquidity on that side of the market, strong low established, right? So we're gonna go here, and we have that respected. That would have been a nice entry at 4 p.m. yesterday, but unfortunately, NASDAQ closes at the same time as the stock market, so it actually would have been a horrible time to get in. You would have likely got taken out by spread, or it would have just been ranging right here for quite some time. But currently, we have this same area. So this our dealing range is from this strong low, or technically our dealing range is from here to way up here. Let me just shrink this to make it a little smaller. Our dealing range is going to be from here to here, but we have a new dealing range establishing itself currently from here to wherever this ends up. So the next possible high that it could take out, and what you could use as a target given how aggressive NASDAQ is this 1H high. We will be entering this on the 15 minute, by the way. This 1H high right here. Because you can see how aggressively she moves up and down to places. NASDAQ does not come to play. It respects our strategy. We do well, and you'll most likely be able to see this. Now, it's forewarning, I lose on trades too. I just control my risk. That's how I've been in the game so long, and how I've been able to build accounts. I'll lose 2 or 3%, but then I'll have a 1 to 6 running. You know what I mean? On another trade, and then I'll win another one in a row, and that's another 1 to 4. So now I'm up 7% for the week, even though I lost several. You know what I mean? You have to keep your risk in control. I have rules and parameters in my trading plan that say if you lose 2 in a row at 1%, cut your risk in half and take the next trade at a 0.5%, recover some losses, and get your confidence back once you have won 2 in a row from that 2 in a row loss in order to be back in profit. And it won't take much, because if you lose 2% and you go from 1 to 3s and 1 to 4s, that's 1.5 to 2% per trade. So it would take you 1 to 2 trades in a row, as I said, in order to be back in good standing, right? And that's specifically coming from those 2 losses, right? Keep your risk at a 0.5% until you win a few in a row. If you do lose a few more in a row, drop your risk to 0.25%, right? That way you start to recover. And this is strictly so that you keep your risk down while you're in a losing streak, and also so that you can bring back your confidence. You're not going to be mad about risking 0.25%. Eventually, your win rate will kick in. If you're following a trading strategy, your win rate will kick in. You'll start to win a few in a row here and there. And then you can resume 0.5% risk once you win a few in a row at 0.25%. And then from there, you can win a few in a row at a 0.5%. You can risk 1% risk, right? Or if the trade setup is like A1, you can resume 1% risk a little earlier. But I don't like to break the principles of my trading plan. So if I'm on a losing streak, I will cut risk in half. And then also cut risk in half again if I keep losing. That way, when you on the losing streak, you have micro fractions of a percent, 0.25%, 0.5% coming out of your account instead of an entire percent, and it just works better that way. So this is what we have on the 1H so far. I will be targeting these highs right here because current prime time is now, so we're gonna have a very aggressive run. This consolidation, what happens after consolidation, is obvious consolidation right here from this candle to this current candle. We have to have an expansion to the upside after that. 15 minutes time frame. All right, so zooming out, we go to 15 minute, and I like to use the kill zones because they also apply very nicely for that. We are going to edit some things though, just real quick, not the daily low. All right, so yellow is London, blue is New York. We had London manipulation, which normally happens. Boom, London manipulation. That was a sell. Price did on the 1H. Let's see. Did it take out a short-term low on the 1H? That's usually what I look for. Some type of short-term low being taken. That did happen here the other day. So they might be feeding off of this recent short-term low take into this order block still. But we're going to have to see. Because right now we're currently inside of the kill zone. And I do expect price to obviously come back down and mitigate that kill zone. Do we have liquidity shift confirmations? We do. Price came up, traded above that short-term high. Boom, there's a trade idea right there. This is a short-term high on the 15-minute that was taken out. We can draw that in, and then we are going to look to see if we have DR, IDR confirmations because it actually works the best on NASDAQ and SPX and things like that. So we have buy side liquidity. Oh, that's the wrong one. Buy side liquidity here that was taken, and we can kind of start to dial in on our 15-minute BOI as well. Let's see, you're still with me. All right, so we have that going currently, and we will go from there. This was respected. This is that same strong low. So what we'll do is We will draw that in as well. We will draw that in on the 5 minutes, on the 15 minute. We're gonna draw in a few 15-minute POIs. 15-minute POI right here. The trade idea came from here. Open that up. All right, so 15-minute POI trade idea came from there. Price did have that the trade idea. Price came back down, and now we are rejecting that. So long, very, very likely from here. We'll see though. Kill zone is right here. We're gonna check to see if we have DR, IDR confirmations as well for this trade. So we're gonna draw down to the 5 minute real quick. Don't like the price action. I would rather wait on the 10 a.m. DR, IDR. So I would like the new DR, IDR to form for the 10, which is in 30 minutes. It'll start to form. And we can target this high right here. This 1 hour high. You know what? This is a little hack. I'm gonna draw my risk to reward ratio based on this. Just to make sure it's behind the kill zone. It sure is. Perfect. So we'll execute that. This is gonna be a high probability trade. So I get the dials me a 1 to 8 when I use a 15 minute. Let's go to the 1 hour. I'll do the 1 to 8. That's cool. Yeah, 1 to 9 should be perfect. This is just barely above. So we're gonna go for a 1 to 9 here on NASDAQ real quick, and yeah, we're going to go for a 1 to 9. I'll pre-put this. 1% risk, entry, stop loss, and TP. And then we could put our brackets right here for the pip count. Perfect. Zoom in. And we're here to see if that is respected, or if they're going to come take out that low. They might come take out the low, but I just don't see that happening considering the price action that we've had already. But in the event that they do take out the low, that's fine. Just means we need to see just a little bit more price action before we get into the trade. Is there a displacement? Is there displacement anywhere? Trying to find some displacement, man. We had displacement here. Displacement lower here and displacement higher here on this high takeout. We had that. But I'd love some displacement in this current area before I got into the trade. So we already had not really the high taken out right here. We had I'm gonna catch NASDAQ and then maybe one more and then call it a day, because you don't need to be in these pairs all day long. Asian session. What do you got here, bud? What's going on here with you? It's taking our time coming up, but we will catch that either during Asian session tonight or something. But that's and they're coming down as well. They're just taking their time. Once they reach their POIs, we have a potential 1 to 6 here and a potential let me see something. What if I wonder how much. Let me see something real quick here. Well, that's not it. That's for sure. Let me just go to regular YouTube real quick. I need to see something. YouTube.com, because I just had an idea. This might be the craziest thing that I've ever done in my entire trading career. I think this is it. Is it the privacy? Where's the here it is. Perfect. We're gonna see something. I need to see something here. I'm gonna see if this ups my stream viewers. If so, I might do once a week public live, maybe, in order to grow my YouTube channel a little bit better. It's fine. When you live trade, people come. That's literally all there is to it. When you live trade, people come. It will come. It'll come quickly. I don't think I was supposed to hear stream. Perfect. So that's that. We will we'll see what that ends up being. We'll see what that ends up being. Perfect. We'll see what that ends up being. It is 8:28 in the morning. We have very slow price action on EN, GN, but we are looking for longs in these situations. Literally every situation except for 1, 2. They are taking their time coming up. Let me see if I wonder if I can see how many viewers I currently have. Concurrent viewers. Okay, so I have my chat right here. Currently have no viewers. That's fine. That's not what I wanted to do. That's for sure. Do. Okay. Let me see something. So it's just a waiting game, honestly, until you get your confirmation. Sometimes you don't always get them when you want them, and that's fine. So Nasdaq is going to be my main focus here, just for the sake of time in the session. It is pushing to take out the low right here, and it did take out the low right here as well. We did not get into this trade yet, so this strong low is not a strong low. This is actually the current valid strong low in that case, since we have been violated to the downside. The strong low would not be valid. So it looks like we're going to trade below our POI. So it's not a valid POI. This one for a value gap. All surrounding the strong low was one I was focusing on mainly. So we did have a short-term low taken on the 1H, as I seen, and I don't expect this to be taken. If it is to ever taken, then this trade is not valid. As simple as that. That's why you have a trade idea, and then you have the actual execution of the idea. So you have to wait for the idea to come to fruition, and then see if you're going to be correct. And if you're not correct, or something happens contrary to what you think, you can either have the experience to adapt, or you can have the experience to adapt, or you can just exit the trade and ditch the trade, honestly. So we had some buy side here taken, some sell side here taken. This is 1 hour for value gap. Let's see if we got premium discount on our side. When it comes to that, are we currently in discount territory? Yep, we have that 62% Fibonacci level rejection. Perfect. Into discount territory. Yeah, I'll plug you in a moment. So in this case, we have the 62% confluence for that. That's on the 1H. I do expect price to continue to the upside from here, given the short-term low that was taken out on the 1H, which is what we wanted to see. So I would be waiting for some more bullish price action, essentially a high, price trading above that high, liquidity shift, and then I'm going to do a limit order there. So I would feel very comfortable doing that. Unless there was some USD news that could have come out, but I don't anticipate the low being taken out. If it is, the trade idea is not valid. It's just not. It's just as simple as that. So we're going to see if the strong low is actually indeed a strong low, or is NASDAQ bearish. I don't see it being bearish with bullish predicted candle. So this should be rejection, 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 and then, you know, from there, rejection, 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 and then from there you would have more bullish price action signatures. Wait. Everything. Okay, so let's zoom in here and wait for NASDAQ to give us confirmation of our long. We did have that POI violated back into the imbalance. That's fine. Sometimes things don't go as planned, but the POI is still being respected from a 1H perspective. So we will have to see about that. Let's go down to the 15-minute. I really don't like the price action surrounding NASDAQ right now for the long. We did have that short-term low once again being taken out, and we're going to pretty much have to see if the strong low is indeed a strong low, but I do anticipate that being a strong low for that, and for it not to be violated. So the premise of the wick at 13,042.3. Don't know why YouTube exited out of itself, but I can close a few of these because I already have the general direction for where they're going. We already have AUD, USD fundamentals. I'm going to open back up YouTube real quick. Apparently my kids are freaking out. And they don't, a lot of them are teething right now, so they go crazy, bro. I'm trying to see how many viewers I have on this currently. Oh, perfect. Perfect. Okay. So we'll wait on NASDAQ and see if this is indeed going to be a strong low. If not, then we have this potentially being a strong low and or a PLI. Our dealing range, technically speaking, in my eyes, would be this, considering that we took that buy side and took the sell side right here. But NASDAQ might have other plans. And did we violate that already? We did trade below the premise of that. That's no longer a strong low. It does not qualify. There is an imbalance here and an order block down here that NASDAQ might respect. But other than that, we will see. So for now, we'll just wait on raw price action and go look at our other pairs that we are also looking at. So whenever you have a situation like that, you have to demand more price action, right? You have to demand it. If you don't demand more price action, it's gonna be a bad time. So I would feel pretty comfortable with the trades that we have currently going the places that they're going. So I think I'm going to call this one EN because there's so much context behind this trade. GN as well. I might have to cut the live stream short. Well, it wasn't really going to be short. I might have to cut the live stream shorter in order to in order to just do some things, like take care of some things that I have to take care of. But